This market has become extremely negative over the last couple weeks, and I think that the main thing that we are looking at is that, yes, it does warrant a little bit of frustration when the market is down the way that it is. However, I think that the biggest thing to really focus on is just what's happening around this space fundamentally that's going to shift into overdrive this year. And of course, when we think about that, we look at tokenization, we look at, regulations, we look at utility, because again, all of these things have one thing in common. They go back to, what we've been addressing for years around crypto, which is we will eventually move out of the hype and speculation phase of crypto. And anyone that has been oblivious to what's been happening over the last 12 months, they might not see this, but yeah, we are moving from the hype and speculation phase of crypto. We are now entering into the utility phase of crypto where, these projects like XRP, HBAR, XLM, XDC, QNT, all of these types of projects are going to see increased adoption, increased use, and increased value growth. Because again, it's just logical to think that once we are starting to see everything in place for, the big picture to form, that's the end game for these utility-based projects. And those pieces are, of course, regulation, adoption, integration, and utilization. And that's happening. We're already in the beginning phases of all of that. And it goes back to, of course, institutional growth and tokenization. We have here, December 29th, crypto winter looms in 2026, but Cantor sees institutional growth and on-chain shifts. They're seeing early signs of a new crypto winter, but one that's less chaotic, more institutional, and increasingly defined by DeFi, tokenization, and regulatory clarity. And yeah, we're starting to see that right now. I mean, we have been watching and tracking tokenization in a huge way. It's because tokenization continues to be a main topic on Wall Street, on every single platform, in terms of like mainstream media. Tokenization is everywhere. We even have over here, tokenized stocks reach all-time high 1.2 billion, while ESMA flags risk of misunderstanding. Because no matter what's happening, no matter how they try to hold back this tech, it's not going to slow down. Tokenized equities compared to early stablecoins and DeFi, highlighting early adoption. Coinbase and Ondo Finance are preparing tokenized stock offerings, expanding global access. And yeah, it's only going to expand from this point on. Like, we're not even at the beginning phase of this. I would still say that we're still in the planning phase, even though we still have like almost $20 billion on chain in terms of tokenized value. We're still in the early phase of this. And also, we just got a big update from the FDIC. They support clears, or FDIC support clears a path for tokenized deposits to scale. Yeah, we're starting to see every big player, even regulatory bodies, clearing a path for tokenization to scale in a big way. We already know that the big banks have been jumping to tokenization, JP Morgan, Citi, Bank of America, etc. The FDIC basically just gave them a major green light by this was at the end of 2025. So just imagine how many big players are going to be tokenizing, tapping into DLT, tapping into, blockchain-based services by the end of 2026. 2025 was a whole year of nothing but removing obstacles and giving the big banks and institutional players in Wall Street a clear path to adopt, utilize, and scale. And once we get clarity in place, that's when we see everything unfold. Now, also on top of that, we have over here crypto news today. Real world assets overtake DEXs to become DeFi's 5th largest category by TVL. Yeah, it's because tokenization is not slowing down. It's accelerating. Everyone that's getting increasingly bearish on price action does not realize that, right now in terms of tokenized value, we're only in the billions of dollars. We're in the low billions of dollars, by the way. So this is not going to affect the value of, assets like XRP or HBAR, etc. just yet. But as we do start to see more and more tokenized value hitting these chains, starting to be transacted 24/7, 365, that's when the value starts to scale. And that's when the underlying gas token, XRP, HBAR, etc., starts to rise significantly in value. Which takes me to the next part of this video, which is we have here from Jungle Inc., Bloomberg, RWA tokenization of everything starts now. Stocks, bonds, commodities, and real estate will shift to 24/7, 365 markets easy borrowing and lending, new class of equities, native tokenized equity issuance. This is from Bloomberg. This is on Bloomberg Markets on mainstream media telling you tokenization of everything is beginning. Check it out.
We're about to get the Clarity Act out of committee, I believe, which is going to be the biggest overhaul in many ways to securities and commodities regulation in decades, which is going to make it easy for the second part of my thesis, which is the tokenization of everything. So you're going to see markets globally, including the US, start to adopt tokenized versions of equities, commodities, real estate, et cetera, et cetera. And then the third, I think you're going to see more of the same as it relates to global and specifically U.S. debt markets, right?
See, I have a problem with this, Bill, because I wonder why replicate and why would you buy the replica when you can buy the real thing?
I wouldn't buy a replica. So that's a good question. There's a nuance there. So the early days of tokenization are going to be tokenizing existing shares, which has a little bit of value, which I'll explain in a second. But the real value comes in native tokenized equity issuance. And that has huge advantages. The first is stock markets are closed more than they're open. Okay. Crypto markets don't close. So now all of a sudden you have the opportunity to have a 24/7 borderless market, right? That is 24/7 liquid, which is what investors in 2025, 2026 want, in my opinion, right? That's number one.
And that's the biggest argument when it comes back to tokenization is why would we even buy the tokenized asset when we could just buy the asset? Well, it's not so much about, just tokenizing it and that's it. When you tokenize, say for so an apartment building, right? Now you can have investors invest in that apartment building. Say for so you want to sell 10%, right? You want to sell 10% equity to someone. Say for so an investor, right, wants to buy 20%, 30% of that building and receive 30% of those profits. They now can do that through tokenization. Also, it lowers the obstacle to entry for even low income investors, because now you could have, say for so, $1 million property. You can now split that into 10, right? You can, have somebody buy in for 10% of the property value. So now you can divide that into 10 and have 10 individual investors, which also unlocks the opportunity of finding, more liquid opportunities for real estate anyways, because real estate for the longest time has been an illiquid asset class. So again, it's just the idea of 24/7, 365 on top of opening up a completely new wave of investors. So it's a huge opportunity for all of these major asset classes to be brought on chain and unlock so many new efficiencies and even new use cases as well. Which also takes me back to even XRP, right? Because if we think about XRP, XRP has well over $400+ million tied back to it in terms of tokenized value. If we're adding in stablecoins, it's nearly $1 billion. We're still in the very early, phase of XRP, and the XRPL getting fully adopted for tokenization initiatives. However, this is one of the few very first chains that had tokenization built into it, and focused on, since day one. One of the first major networks with a built-in DEX as well. I mean, the XRP ledger was built for these types of use cases. Now, at the same exact time that we're, talking about this and hearing about tokenization in a big way, Tom Lee, which I know that Tom Lee has not been, a very good voice of reason in this space because of his, overall predictions. However, he is correct on one thing, which is, we are entering a super cycle for tokenized assets. I think that the biggest misconception here is that, we look at, we're going into a super cycle for price action. No, we're not going into a super cycle for price action. That will happen, sure, at some point. But the main thing that I'm looking at here is more so a super cycle around the tech, super cycle around the adoption phase of crypto. So here we have from Jungle Inc. as well. 5 to 10 year crypto super cycle. Tom Lee sees tokenization driving long-term growth for crypto. This would benefit chains like Ethereum, XRP, and Solana. Check it out.
The outlook for crypto is still really good for the next 5 to 10 years. I don't want to overuse the word super cycle, but we know that Wall Street wants to tokenize everything, whether that's Vlad at Robinhood or Larry Fink at BlackRock. And that's going to bring a lot of efficiencies to Wall Street, but it really brings the use case forward for something like Ethereum. So we're pretty bullish. I think Ethereum, which is around 3,000, can easily get to 9,000, 7,000 in early 2026. And then over time, as it starts to be competitive with payment rails, could get to the 20,000 level. So I'm pretty bullish. The outlook for crypto.
So I don't really care about his price predictions. However, I will say one thing. Yes, for the next 5 to 10 years, crypto looks massively bullish. Because again, everything that we have talked about over the last couple of years is coming to fruition. We are starting to see regulations. We're starting to see the obstacles get removed for the big players to jump in. And they're not just jumping in to invest or, offer ETF products. No, they want to tokenize. We know that they want to tokenize because we could see them on chain tokenizing right now. BlackRock is already here. We have major institutional players, major institutional funds already on chain. This is just the beginning of a much larger shift for tokenized assets. On top of this, remember that Tom Lee did say that, yes, Wall Street does want to tokenize everything. Wall Street isn't just watching crypto anymore. Major institutions like BlackRock and JP Morgan are building the future of finance directly on Ethereum, leveraging smart contracts and tokenization. It's like the old saying goes, first they ignore you, then they laugh at you, then they fight you, then you win. Listen closely to this.
The reason to be excited about Ethereum is Wall Street is choosing to use the blockchain for the future. That's the big change.
Exactly.
It started with stable coins, and it was a big aha moment for Wall Street.
Mm-hmm.
But that's just tokenizing a dollar. And now Wall Street wants to tokenize everything.
Oh, yeah.
And they're not going to build it on Bitcoin.
No.
They need a smart contract platform. But if we want to look at who the institutional world wants to build upon, they don't want to build upon an experimental chain or a newly launched L1.
Yeah.
They want to build on something that, one, already has a huge community of support.
Absolutely.
That is 100% uptime.
Zero downtime.
Zero downtime. And they're not paying anybody to use their chain, which is where, so organically Ethereum is the place where all of this is being built.
It is the most decentralized ledger ever built, right?
And it works great. The reason.
And of course, this is just like a sales tactic for Ethereum at this point. But, he is correct. Wall Street is here in a big way. They want to tokenize everything. I don't think that Ethereum is going to be the biggest winner of this, though. And I've talked about this on multiple occasions. When we think about proper scale, proper demand hitting these networks, Ethereum, once it starts to see that increased demand, that increased scale, these institutional players are going to get very upset when they are getting hit with insane gas fees. The gas fees are still a problem. The scalability issues are still there. Ethereum has major issues. I don't care what Tom Lee or any big player is saying. Tom Lee is basically Michael Saylor for Ethereum. That's really all he is. So it's all sales tactics for Ethereum. Obviously, he has an Ethereum business, so it relies on just, hyping up Ethereum as much as possible. But I think everyone's getting distracted by Bitcoin and Ethereum. I don't think that they're looking into the actual other networks here that will, most likely provide the rails for majority of tokenized assets, because again, they can scale. They have that scalability. They have the low, fixed fees. That's where we look at like XRP, Hedera, and, Stellar, etc., because those are the chains that have that massive efficiency tied back to them when it comes back to transacting. But, going forward, I do think that we need to be looking at a completely different theme here, which is, of course, utility. And what's crazy about this is Ripple did put out a post back in December saying, hey, if we look back on Swell 2025, some of the key themes here were utility is the first priority, financial assets are all moving on chain, institutional adoption has already crossed the experimentation threshold, global regulatory standards are the inevitable policy frontier. And yeah, utility is the major thing to focus on right now. It's so challenging to, talk about utility because a lot of people just think like, oh, well, utility hasn't done anything for price action right now. But the thing is about price action is that we're still heavily tied back to just what Bitcoin is doing. But like I've said, with everything happening with regulations, with adoption from institutional players, I do think that the utility side of this market is really going to see a ton of growth. It kind of goes back to even 2024, right? Like the end of 2024, the biggest movers were utility-based projects. I think going forward, that's most likely going to be the common theme. But we have here that real-world utility eclipses experimentation. When we started this project, was a common refrain heard across stages, a nod to how far the industry has progressed from early days proofs of concept in such a short amount of time. Because when we think about what's happening here, we have on-chain finance to stablecoin payments, we have tokenization initiatives, we're moving away from the pilots, we're moving into production, and we look at the common tone here, which is, yes, we have big banks, we have major players utilizing payments, utilizing blockchain, utilizing stablecoins, utilizing, custody for, new use cases. All of these things are happening because of utility being the focus here. And we're starting to see TradFi and DeFi players converging at a rapid pace. We're starting to see tokenization be the main driver of this, but when we think about tokenization, it doesn't end there. We're going to see FX moving on chain. We're going to see cross-border payments, completely revolutionized through blockchain and digital assets. I mean, we are at one of the most important parts of, the evolution of our financial system with crypto at the, center point than ever before. This is a crucial point in time. If you've been in crypto for the last couple of years, this is the moment that we've been waiting for. We're at that, early moments where we are starting to see everything fall into place. I know that price action is 100% a priority. It definitely is. But, think about where this space is headed. We're just now starting to see the big picture. And it only gets bigger from this point on. I'm very excited about what's going to happen this year and going forward. But one thing is very clear here. We need to focus on utility. We need to move away from the hype and speculation side of things, because the next phase here and the next big wave of, capital is most likely going to flow into utility-based projects. So with that being said, I hope that you guys enjoyed this video.